All eyes on Wall Street again today after those huge sell-offs Monday and last Friday. But today, stocks were up most of the day until a late-day collapse. A roller coaster on Wall Street. Just minutes before the closing bell, a free fall, the Dow down more than 200 points. After rebounding most of the day from yesterday's unprecedented 1,000-point drop, Monday's losses alone cutting $3,000 from the average American's 401k.
You should not make any changes in your retirement portfolio based on anything that's happened in the last week.
The volatility sparked by fears of a domino effect from China's weakening economy.
If China's economy slows down, their people will start demanding less and less of the products that we make here. That's bad for U.S. jobs.
But overnight, Chinese regulators stepped in with emergency measures, including lowered interest rates. And while it didn't stop the free fall in Chinese markets, it helped send stocks here and in Europe soaring.
There's still plenty of uncertainty to make people nervous, cause sell-offs, maybe a little bit of panic selling beyond what's necessary. So, strap in for a bit of a bumpy ride.
For analysis and insight, I spoke a short time ago with Anthony J. Domino Jr. He is the managing principal at Associated Benefit Consultants. So, Anthony, yet another day of volatility in the markets. That's 3 in a row now with the big swings. Is this what you'd expect? And how much more of these days do you think we're in for in the next few?
Well, if I can answer that question, I think we'd all be somewhere else, probably on some island somewhere. The truth of the matter is, when I became a financial advisor 30 years ago, I made it a point to smash my crystal ball. Volatility is a sign, obviously, of uneasiness and uncertainty mixed together. The point in time at which it will go away probably is when the market feels that the risk has been taken out of the system. The biggest part of the risk was not only the devaluation of the Chinese currency, but more importantly, what came to light was that the government had been perhaps overinflating their results for the growth of their economy. So that leads one to believe that the short answer is, when the truth comes out and everyone's satisfied that it's stable, then I think some of that volatility would go away.
Not all of that is breaking news, though. I mean, we've known some elements of that for some time now, and the market usually takes into account assumptions of what they think is going to happen. Were investors really caught that off guard, or they just got the bug a little bit from China selling off?
So I guess it's a classic definition of being spooked. I think there was cautious optimism. There was concern. A lot of people have been talking about the market being overvalued for the bulk of this year already. It had been up a fair amount year to date, about 6-7% at the high, before there was a gradual eroding. The last few months have been choppy waters to begin with. But when the market, which counts itself as trading on fair and open exchange of information, and that everyone has the same knowledge as everyone else, when the market suddenly finds out material information that is different than what was expected, and there's already that uneasiness, it's common to have somewhat of a drop. The I told you so's get going.
Much of the rationale behind this volatility has been China, as you referenced some of the issues that they're having with their market there. There's so much that people don't seem to know about what's going on in China and how Chinese businesses work. If the problem is, as I've heard, in China, we could be feeling the ripple from this for a while. I mean, even if the rest of the world recovers, China could still be lagging behind, correct?
No question, Andrew. The real issue, though, is that this is an issue that's not just a market-based issue. This really, beneath it all, represents the clash between capitalism and communism. So China's whole deal has been, we think we can control and tamp down and have cautious capitalism, that we can control the free markets, not let them be as free as we want them to be, and still keep a limit on it. Clearly that, I believe, is not the case. And clearly what's happening is the ramifications of the fact that the government won't allow that remain to be seen. So will the classic leadership there respond as a communist approach would be, which would be to tamp it all down and control it? Or will they do what they did today, which is what rose to the early increase in the market, and say, we're going to cut interest rates? But we're going to encourage more support.
From a layman's standpoint, this is the kind of thing where we could be getting hiccups out of China for quite some time. I mean, we could have days like Mondays popping up intermittently over the next short term. Could we?
There's an old song like that, right? Yeah, we will, and we could, and we will, and make no mistake about it. Whether it's China or something else, we are in an information age today where news travels in a nanosecond. And it's not just financial professionals who are providing their clients with support, or brokers or traders. There's plenty of people sitting at home controlling the market. You have computer-generated trades that are occurring all the time. There's so many varying factors that are impacting what happens day to day at the markets today and on the floor of the stock exchange or stock exchanges, that it's very, very hard to control that. So that, like anything else, technology is creating a much shorter, quicker reaction time. And I think that this is the new normal, or more volatile swings or wider swings.
How much fear are you sensing from investors over the last couple of days, whether they're willing to put their money and put it back on the table again? And do people seem to think that this is a correction or a downturn?
Most people think it's a correction. The short answer about how much fear, I would say almost, is not enough. Markets tend to be dominated by a healthy balance between fear and greed. So I'm willing to take the risk if I think there's a high probability of return and favorable return back into my portfolio. But the fear issue has probably been, everyone understands this, and that most people that we've talked to have understood it's been a normal correction, and that it's to be expected.
Last question. One of the other components in all this has been oil, and oil has certainly been volatile. The price is way down under $40 a barrel.
Right. Most
folks are saying, hey, that's great. It's going to cost me less to fill up on gas. Is that the view that you take of it, or do you take the wider look, well, oil's a critical component in the economy, and if people aren't generating money from oil, that takes a bite out of the overall picture?
That's a great question, and the answer is not that far from the answer to really what's happening in China. As our markets get more transparent and more efficient, then any surprise or change, or any revelation that something has been artificially trumped up, so where it may have been the Communist Party in China, oil may well be OPEC, a cartel that controls and artificially pushes up the price of the commodity based upon controlling supply and demand, controlling supply to raise demand. Simply put, I think that oil it's good for the economy if it is lower cost and lower priced, but at the same time, I think it will create problems as part of the overall volatility of the marketplace.
Is it possible that I'm even more confused about what's coming in the economy than I was before this interview started?
Boy, I hope not by my account.
No. I think it's very confusing
can be a bad
stuff.
thing. It's very confusing. But the issue, in our opinion, is to stay in touch with a good plan. Someone who has a good plan and understands what their money is purposed for, or what the purpose is for their money, will be able to survive these type of bumps.
That's why I bought a king-size mattress. It holds all of my...
Look at you.
Anthony Domino Jr., thank you so much for
Thank you very much.
Appreciate it.
Appreciate it. Have a great evening.
Hudson Valley headlines are up next. Stay with us.